please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Meghta Batra and my co-anchor Prashant Nair will be joining us very soon. But for the markets, it's turning out to be a bit of a consolidatory kind of day after the strong run that we saw in yesterday's trading session, which was really supported by the global markets as well as the bond rally post the RBI policy. So for today, we're taking a bit of a breather with the Nifty just about at around 10,300. We have the Bank Nifty, which is underperforming a tad bit. So we're down around 0.3% currently for the Bank Nifty. Having said that, we do have a positive advance decline ratio on our hands. So let's see whether that sustains through the trading session. But currently it's standing at a good healthy 1100 plus stocks advancing to around 850 stocks declining on the National Stock Exchange. Just to point out a couple of stocks which are in focus, we have Lupin, which is off the day's high now. So up around 3.5% for that stock. Interglobe Aviation flat. But remember, strong run that we've seen on that particular stock. Shobha, which is up 8.5% at the high point of the day. So a lot to discuss in the next 1 hour. Hi, Prashant.
Ekta, hi, good morning. So the pharma index is doing well, right? I mean, pharma stocks are bouncing back a little bit. Even Sun, which has actually been the worst of the lot, while others have bounced on days on occasion, Sun sort of firmed around the 510 odd levels is coming up just a little bit. So that's the biggest gainer, the pharma index. But it's that, I mean, the index itself has done that on occasion, only failing to deceive. I mean, at some point in the future, it again goes back. All these stocks have had that characteristic for a while now. The other indices, energy is doing okay. The real estate index is doing okay. Real estate stocks have been on the move for the last couple of days, but that's about it. On the downside, it's public sector banks and metals, which saw pretty large moves in trade yesterday. I mean, actually metals for the last couple of days. We will get some trades now. Today, let's start with the F&O trades. Krish Subramaniam is with us from Altamount Capital. Krish, good morning. Good to have you here. What would you trade?
Well, Prashant, I think we have had a very volatile week, and I don't think it's going to end anytime sooner. So I think we are recommending buying of a straddle, that is recommending buying of a 10,300 strike, call it a put. So total cost is, on the Nifty, I mean, and the total cost comes to about 260 bips, keeping a target of 350, and one could keep a stop loss of 210. And stock-specific ICICI Bank, now it's of course seen some pretty severe short build-up in the last 3-4 days, but close to the levels of 250, 260 also enjoy some pretty good support. So we are recommending buying of a strangle. I think we could see this move both ways. So one could buy strangle, that is recommending buying of a 270 strike put and a 280 strike call. So the net cost comes to about 14, keeping a target of 28, and one could keep a stop loss of 7. And the last one is contra bet on Idea call buying. That is, we are recommending buying of 80 strike Idea. Now, I think the telecom stocks have already seen some pretty severe shorts, and I think Idea in particular close to some very important support levels. So since the series is still long, I think we could see some bounce up to levels of 80. So one could possibly buy an 80 strike call that's quoting it around 1.4, keeping a target of 250, and maybe one could keep a stop loss of 70 paise.
Okay, all right. So those are some F&O calls. Krish, thanks very much for joining in and taking us through those strategies. We have Sandeep Wagle also joining in on the technicals this Friday. Sandeep, over to you then. Morning, what are you recommending? One on the Nifty as well as on stocks?
Good morning. I would talk of the Nifty being range bound. I don't see 10,250 being broken. I don't see 10,350 being broken. This 100-point range with a sideways to kind of a bullish bias. Stock specific, I would go with a buy in a Chennai Petro, stop loss of 345, target of 360, and a buy in a NIIT Tech, stop loss of 887, target 930.
Those are the only two trades?
Yeah.
Okay. The market otherwise, what's your view?
I still have a bullish bias. The way we have come out yesterday, I think today on a correction, one should buy.
Okay, one should buy.
Okay. All right, Sandeep, we'll let you go on that note. Thanks very much for joining in, taking us through all of those strategies. Well, for the markets, we're a bit sluggish, you'd have to say, but after the good run that we've seen, especially yesterday, it's now complaining a tad bit. But nonetheless, the Bank Nifty is now moving closer towards the low point of the day. But Prashant...
You know, I have some data on mutual funds, which we'll put up in just a bit. You know, we'll... just, I guess, take a quick break and then we'll come back. in a bit, because there is some granular data I want to look at.
But
and we'll come back to that
what's
later.
the crux of it?
I mean, I think it's all over the newspapers today as well. It seems like
there's been a
steep dip in inflows into equity mutual funds. And it's a pretty dramatic one. I mean, if you actually take a look at the equity schemes, which is equity, pure equity, arbitrage plus ELSS equity as a category, that's the dip. It's almost 60% lower. It was 16,000 crores in the month of Feb. It's under 6,700 crores in the month of March.
But is that because of, say, the LTCG concerns?
Yeah, seems like it. Seems like it. And that's the reason why I wanted the granular data, and we'll have that graphic up in just a bit. What that shows is, and we'll put out the numbers in a bit, that gross inflows, I mean, this is the net number that you had on your screen, but the net number is arrived at basically the gross inflows minus redemptions.
Yeah.
What has happened is that gross inflows are strong. They're still rising. But what has happened in the month of March is redemptions have risen more. And as I said, we'll put the number up. There is no such problem with balanced funds. That's the second, bar graphic, which is, yeah, that's the one. So that's risen in the month of March. 6,754 crores compared to 55,226 crores in the month of February. So that is doing just fine. And the reason I think, it's LTCG, of course it is LTCG, but I want to just make a point that March usually is a pretty strong month because of, there's more inflow into equity schemes, etc., because of tax reasons, ELSS schemes. But while this month should be disappointing for, I guess, mutual fund managers, etc., we'll try and get a reaction or two as well from the industry itself. In terms of whether...
And how do gross inflows match up versus previous months? Is it stronger? Is it seasonally...
No, so gross inflows, I have the numbers here, but we don't have the graphics, but gross inflows are up 21%.
Okay.
Pure equity. But redemptions are up 40%.
Okay.
So
maybe we need to actually just see the trend in coming months as well into FY19.
Exactly. We'll just have that up in a bit, in the next segment maybe, the category-wise data, because I think that should clarify what's really going on. The market's down 26 odd points now. It's been a pretty flat session so far. 10,298 is where we stand. The mid-cap index is doing a little better. It's down only about 0.1%. The Bank Nifty is down about a third. Let's take stock of what's happening in the world of commodities. Manisha is here with exactly that. Manisha, morning.
Morning, Prashant. Thank you so much for that. Well, we have seen some pressure come in for the base metal prices. Well, the previous quarter did not end so well, and this week as well is closing on a very flat note. Most of the metals actually are getting into the negative here. We have seen US proposing yet another $100 billion in additional tariffs to US, and the retaliation, the whole trade fears are back on the surface, and that seems to be pulling those prices down. So we are trading nearly 0.8 to 1.5% on the lower side. The cues from the Shanghai markets, of course, are not there. And in addition to that, you have the strong US dollar, which is trading at a 2-week highs, also weighing onto all of those prices. Well, the expectation really is that it is the uncertainty more than anything else which is weighing onto the prices. Eventually, the expectation is that you will have both the countries perhaps coming onto the table and discussing or ironing this thing out. But at this point, with everything, the concerns heightened, we have seen a lot of pressure come in for this space. Prathamesh Malia of Angel Commodities now joins us to talk more about that. Prathamesh, hi. What is your sense when you take a look at the metals as a sector? Because while the New York session yesterday was good, we even saw a couple of percentage point of gains in some of those metals. We haven't been able to hold on to that.
Morning, Manisha. Yes, as far as metal space is concerned, I think this tariff war and trade war is something which is really creating a pressure on all the metals. And I think in the scenario as such, wherein tensions are building up between US and China, wherein both the countries are imposing tariffs on each of their commodities, whether it be imports and exports, I think metals are difficult to sustain at this level. So I think price correction is bound in almost all the metals, whether you take nickel, copper, aluminium, lead, zinc, because China is an importer of all these commodities. So I think pressure is due bound, and I think the best pick again would be copper here again. 428 is what we are looking at in this particular counter. Besides even nickel, we see pressure towards 830 mark, 820 mark. So I don't see metals performing in this particular trade war scenario.
Is this a very immediate knee-jerk reaction that we are watching, or do you see a longer impact of that coming in? And as you are on a sell side in any case, how much of a percentage decline on an average are you expecting for many of these metals?
in many of these metals, I think most of the metals have had quite a good run up. I think 5% downside from here on is what one can expect on almost all the metals. So immediate near-term reaction, I think possibly from 15 days or 1 month perspective, I see 5 to 6% downside in almost all the metals here.
So while we are on a sell side for many of the industrial commodities, would that eventually or an automatic turn into a buy call for the gold prices? Do you see that as the scenario being laid out?
Very true, Manisha. I think in this uncertain scenario, investors really flock towards gold. But then I think 30,900 is what we're looking for gold, and 39,000 is what we're looking for silver. I'm not really too bullish on gold as well as silver, because interest rate hike scenarios for most of 2018 is what is going to cap both these metals. Yes, as immediate near-term trade war scenario, I would be buyer in both the metals.
Okay, all right, Prathamesh as well as Manisha, thanks very much for joining in and taking us through those commodity strategies. We need to take a break now, but up next, or before that, on to a CNBC TV 18 exclusive. Anshu Sharma caught up with Coal India's chairman, Gopal Singh, and began by asking him about the company's plans to achieve the 1 billion ton coal production target by 2020. Let's listen into that conversation and we'll be back.
One thing is sure that yes, 1 billion will remain. Maybe a time scale that they have to suggest, depending on the demand by the market and supplies from the various other. See, so many blocks have been allotted to this captive also, and now government is going for commercial mining also. So all these factors they are taking into account, and accordingly they will suggest a number for Coal India. And we have to go by, we are ready for any number.
There are problems of coal demand and supply mismatch. There are some 12 to 16 projects which are critical or super critical. So what is the strategy for Coal India, which is now going to face competition from private players, to supply coal in time to the power producers or the steel or any other sector which is dependent on coal?
See, higher the demand, better it is for Coal India, isn't it? Already we have, on 1st of April this year, we had more than 55 million ton of coal in stocks. So we will be always looking for the opportunity to maximize the dispatch.
What is the capex plan for Coal India this year, and what will you use it for, and any plans for acquisition abroad in terms of coking coal?
See, this year our target is 9,500 crores. Last financial year target was 8,500 crores. We exceeded the target, and probably that was the first time in the history of Coal India that capex target was made, rather we exceeded. This year we have kept 9,500, and this is mainly for capacity building. If we are looking for the number 1 billion, naturally we have to build the capacity in terms of your mines, in terms of your infrastructure and all this. So we have identified the activities where this amount is to be spent, and we are looking for good response and good effort from our team. Regarding the diversification, yes, we are very much for it. We are looking for the opportunities, and we have a dedicated team. They are working it out, and as soon as we get the opportunity, we go for it.
What kind of acquisition will it be? Because there's hardly any news with regards to acquisition abroad from Coal India in the recent past. So which area and how much of coking coal reserve that you're looking for?
See, there are mainly, 4 areas we are looking for diversification. One, because we have so much of land. So we are looking for your solar power. Already we have defined a target for ourselves, that is 10,000 megawatt in 20,000 megawatt in next 10 years. Second is we are looking for good property, coking coal, because this country we don't have much reserve of good quality coking coal. So we are looking for an opportunity abroad where we can get some good quality coking coal. Third is metal mining, because mining is our core strength. So that's always easier for us to go for metal mining. So we are looking for. Fourth is monetization of waste. We have water, every mine. We have to pump out the water throughout the year almost. So we are looking out how to distill this water, and if we can sell it to market as mineral water or something. Overburden, that's the waste for us. we are looking for some usage, whether this overburden can be made use of for some productive purpose, which can fetch us some financial terms also. So these are the opportunities we are looking for.
15 points lower on the Nifty, so 10,306 is where we find ourselves at. So from 11 over the last 20 minutes, there hasn't been very much by way of change. As I said, pharma is in focus. Pharma index is the top gaining sector. We'll pull up the stock of Lupin, and that's got some positive news flow. It's got an EIR for one of its facilities. Ekta, how significant could this be?
Well, it is definitely positive news, because here we are assuming an EIR is, basically the closure report, and that the street has, or the US FDA rather, has given its go-ahead to this particular unit. Now, I just want to put it into perspective that the company's Pithampur plant basically has 3 units, Unit 1, Unit 2 and Unit 3. Now, Unit 1 is the one which has received an establishment inspection report. This was inspected in July of 2017, and if I remember clearly, they had received either minimal observations or 0 observations, plus they were receiving approvals from this particular unit, which basically is focused on manufacturing oral contraceptives. Now, the second particular unit is the one of concern. That particular unit was inspected in May of 2017, received 6 observations from the US FDA, which was eventually escalated to a warning letter. So that particular one manufactures oral solids as well as ophthalmology products. And lastly, there is a Unit 3 which manufactures dermatology products as well as inhalers. That was inspected in June of 2017 and had received 5 observations, and it hasn't really escalated post that. So while this particular news is positive for Lupin, because that means that this particular inspection is now closed and things are as per normal for them, what one needs to remember is that this has no bearing on Unit 2, which has an outstanding warning letter. Though it might be in the same complex, it is a different unit which has a warning letter from the US FDA, and hence these two are not connected. So it is positive news, but no bearing on the warning letter for Unit 2.
Okay, Ekta, thanks very much for that. So Lupin up 4%, stocks have been beaten down quite a bit, and any positive news at the margin does help. Sonal is also now standing by with some news flow on Sobha. Sonal, morning.
Good morning, Prashant. Well, very strong operational numbers coming in from Sobha for Q4. The pre-sales value has gone up by 31% year-on-year. The sales volume has gone up for 40% year-on-year, and this is the highest in last 12 quarters. In fact, even on an annual basis, the sales value is up 42% and the volume is up around 21%, and this is the highest in Sobha's history. Talking about realizations, they have come down a little bit, but the commentary is very positive. Management says, and they think that they will be able to do this that kind of growth in coming years, and also that the Bangalore market is picking up. They are seeing some incremental demand from the markets like Gurgaon and Kochi, and we had the management today with us. Let's listen in what they had to say to us.
As far as FY19 is concerned, we continue to believe that we should keep growing on a double-digit basis, both as far as values are concerned and volumes are concerned. We also feel that our core market, Bangalore, will continue to do well, and the other markets, namely Gurgaon and Cochin, that also should contribute to our overall sales in a much significant manner.
Okay, all right. So that's the word coming in from Sobha. That stock is showing a good uptake of around 8% and managing to sustain its gains at higher levels as well, though there is some amount of sluggishness which is seeping into the overall market. But we do have Ashwini Gujral to talk about the technicals of the market now. Ashwini, over to you then. For the Nifty, what are you recommending at current levels as well as specific stocks?
See, first of all, what's different from day before when there was another trade announcement. Now today, in spite of the large rally yesterday, the bears have not been able to break the sort of levels which would have disturbed yesterday's trend, and that level is on the Nifty future 10,280 to about 300. We've held on, and each time we go there, the futures premium expands. So at those levels, maybe there is a bit of short covering also. So my sense is that this is a good time to buy into Nifty, and particularly Bank Nifty, because ICICI Bank has gone up another 0.5%. Now if this guy gets into a leadership type position, then it will be difficult to take the bank nifty lower and hence the nifty lower. So today's outcome may just turn out to be different from the day before's outcome, where we basically crashed in the afternoon. Obviously that depends on how badly the futures etc. does, but right now the market is betting that maybe there'll be recovery by the end. So having said that, what you want to do is corporate banks are now seeing consistent buying. So Yes Bank is a buy with a stop of 310, target of 324. ICICI Bank is a buy with a stop of 276, target of 290. And Mindtree is a buy with a stop of 830, target of 862.
Ashwini, sorry, PSU banks, do you have a view now? I mean, I heard ICICI Bank in the view there, but anything in the PSU bank space?
See, after large rallies yesterday, they've hardly given up 0.5%, 1%. So, the bears are not getting traction, and once they don't get traction, they'll be the first desperate buyers. So that way, this market is not giving up any ground, despite having all the reasons of global cues, etc., to do that.
Okay. All right, let's get in some Twitter queries now, Ashwini, for you to solve this Friday. We have a Twitter user who has been holding shares of Dr. Reddy since a very long time and wants to know if he should continue to hold that stock or not.
See, long time is not a price level. So, if it's 200, yeah, hold on. But long time can also be, 2,500. So if that is the case, it's in a bear market. If you still want to hold on, maybe keep a 2,000 rupee type of stop, but it needs to get past this 2350 zone to move higher. And I've been saying for last 6 months, being in bear market stocks will not help anybody, and this sort of value buying etc. Doesn't work out, as we've seen with the pharma space. So even if the market does recover, pharmas may not do a whole lot.
That's quite sad to know. But all right, Ashwini, we have one more Twitter subscriber who wants to know if Apollo Tyres is a good buy at current price levels or not. Remember, Apollo Tyres has just been going from strength to strength. Ashwini?
See, Apollo Tyres is not a great investment because it tends to correct back to earlier levels, more ranging type stock. So it's not, according to me, the best tire stock. You probably need to be in a Balkrishna Industries or an MRF. Apollo Tyres, if you want to trade, the range is, maybe 250, 260 to about, 290, 300. So I would tend to buy it around 250, 260.